So, without further ado, please give a warm welcome to the founder of London Real TV, Brian Rose, and the CEO of Blockchain, Peter Smith. Yeah.
It is a really deep chair.
Right? These are some proper old
You
school
can really get
chairs,
lost
right?
in it.
Right?
It's,
Welcome everybody.
it's-
Thanks for coming tonight. Really appreciate. Thanks to Ford Partners, KPMG, and I think it's pretty shocking what it says about London Tech Week when they put two Yanks on the stage. Well, we're going to surprise you, I hope. This is East London. This is my hood. Actually, Peter's lived here for 9 years as well. I think I've been here for 8. So I love this part of the city. The West London is kind of the pretty part, but this is where all the work gets done. So thanks for coming down here. We're about to dive into Peter's head in about 2 minutes, but I just wanted to say thanks for having me up here. I love telling these great stories of people without too much feedback. I'm right down the road, and I host London Real. We've been telling people stories for about 5 years, and 3 years ago we started Silicon Reel and started telling great stories about people in tech. And yeah, it's just been incredible. And what we realized in tech is that so many people get focused sometimes on the technology and the user experience and the apps, and we forget sometimes it's really about people, about people's behaviors, about great founders, about great ideas. And so I love just telling these stories. And I think we forget that sometimes. It's good to have a good chat. So we're going to be doing some fireside here. Hopefully you'll all enjoy it. This is FinTech. I think technically I am in FinTech. I started out and graduated from the Massachusetts Institute of Technology, which was my tech. But I saw the movie Wall Street when I was a junior, and Gordon Gekko seduced me to go to Wall Street. So I became a banker for about 15 years. But the last 5 years, I've been redeeming all of my sins by telling good stories. So that's me. We're going to have questions coming up here, so I think you can tweet them. And for now, I think we should jump in, right?
Yeah, let's do it.
You're no stranger to London. When did you first come here, and why?
So I came to London to go to graduate school. I grew up on a really small town in rural Georgia. And I went to school in Virginia in another rural town. When I finished that, could we work on the feedback? I don't want to blow people's eardrums out over the next hour. And when I finished that, I really wanted to move to a big city, to somewhere with a lot of diversity, to somewhere that was totally unlike where I'd lived before. And so I got some funding to study in London, and then I just kind of forgot to leave. And I've ended up there in and out ever since. So I've moved to some other places in between, but I've always come back to London, and London's sort of where I've spent most of my adult life.
Nice. And from London, you did a little bit in Africa, Middle East. You've been around the world.
Yeah, so I've lived in East Africa, the Middle East, Southeast Asia, and then now I spend a lot of time, ironically, in the States, which is always kind of funny for me because I really don't know where I am in New York. And so I know like a couple blocks in each direction of our office and then where I stay, and that's about it. But when people visit our office here in London, they don't expect me to know where I'm going or to know where to go out or where to eat or where to get coffee. When I'm in New York, people expect that I have that knowledge, and I absolutely don't. I have no idea where I'm at.
What were you doing in East Africa? It sounds like CIA type work.
Yeah, you know, anytime you're an American and you live abroad, people think that maybe you worked for the CIA. I think the CIA has like in total 2,000 employees overseas at any given time. And if you all haven't noticed, there's always about 100,000 Americans wherever you show up. So it's a small ratio. In my case, you know, I wasn't really good at building a career or a CV. I'd never been really interested in it. I was interested in having great adventures. And so in East Africa, I worked on infrastructure projects, so building roads, building power. And towards the end of my time there, I was doing a bunch of entrepreneurial activities there. But really, people always want to have like some great story or some great career, and really I was just kind of always in it for the next adventure.
Okay. And when you went to Singapore, is that when you started getting into, you know, Bitcoin, blockchain, things like that? Is that when that happened?
Yeah, so it actually was in Singapore. I had done pretty well in a business in East Africa, and I'd been living in these random places, and after you do that, it kind of takes a toll on you, and you want to live somewhere where you can recover. And so I thought I'd go to Singapore, experience Southeast Asia, and then go surfing a lot. And so I did that. And while I was there, started to learn about Bitcoin from a mailing list, and started to hack on it, play with it, and that's where I really first got interested in Bitcoin.
Okay, that was 5 years ago.
Yeah, probably. I try not to keep track of the time because it'll just make you feel tired.
And when you started off blockchain, I'm just trying to think of what you were like 2011, thinking, all right, we're going to go do this thing, and I'm wondering how that changed to where you are, say today. I know you're going off to Beijing tomorrow. When you're thinking, okay, now we're doing blockchain, and I want to do this thing. Has that thing changed significantly?
Yeah, I think most projects that start out and are really engineering driven aren't driven by sort of like a grand vision. And so the original idea behind our first product, and this was not my vision, it was my co-founder's vision, was to just make it easier to use Bitcoin. At the time, if you wanted to look up whether a transaction had occurred, you needed to download the whole blockchain, which is quite large, and then hit Control F on a text file, which is a really horrendous way to look something up. And so the technical insight was, well, we could download and maintain this database and make it really easy as a Google search for people to look up transactions and see data related to the Bitcoin economy. And very much started as a side project, was a side project for the first couple years, and didn't really take off as a company until probably 2013.
Okay. I think you mentioned in a talk last year that there were kind of three original, largely funded companies in the Bitcoin space, which is yourself, Coinbase, which I think changed names now, and BitPay.
So Coinbase, still Coinbase.
Okay.
It's a great brand. Brian and Fred are doing the Lord's work in Silicon Valley. They do have another product now, which is branded GDAX, which is their exchange.
Okay.
But yeah, there's a couple, heavily funded, sort of well-recognized Bitcoin companies with a lot of users. From a, sheer usage perspective, the three biggest ones today are probably ourselves, Coinbase, and Circle.
Okay. And you never wanted to be in the exchange business. You didn't want to deal with transactions.
I'd had some exposure to the high-frequency trading world, and it was sort of a great race to zero. And I thought that eventually there would be the sort of legacy players that would trade Bitcoin, and I thought that they would eat your lunch. So I thought if you built a business around sort of a race to zero product, and if the product that you were trading or supporting trading became very successful, the big boys, CME, ICE, NYSE, would come down in, and I thought they'd eat your lunch. And I still think that's the case.
Okay. But that must have been tempting because there's transaction fees and a lot of money went there, correct?
For sure. And this is an interesting story in the context of London Tech. We need to do one of two things to raise capital in the early days, in like 2013, 2014. One would have been to move to Silicon Valley, because if you're working on a really crazy idea and you're doing it out of Yorkshire, so northern England, people think you're triple crazy. They can get on board with the Bitcoin in 2013, but I don't think they could ever get on board with the York. And then the second thing that we could have done to raise capital would be to have committed to building an exchange. And what's interesting about that is we didn't do either and figured out a way to survive, and really thrive. But if you stand still, the market eventually comes around to you. Like every idea has its hour in the sun. In our case, the prevailing wisdom now in our industry is that building an exchange is a horrible idea. And that what you really want to do is build some kind of software middle layer, which is exactly what we proposed doing in 2013 that everyone said was insane. So I'm kind of confused about it. And now that an exchange is sort of against the grain, I kind of want to build an exchange.
Really?
Yeah, there's some part of me that really feels the need to not be doing what people think you should be. So maybe we'll build an exchange.
Okay. You once said that your mom is never going to use Bitcoin, or that my mom is never going to use Bitcoin. First of all, I'm surprised you're talking about my mom, but that's okay. But You said that you're not really trying to adopt those older users necessarily, and you're really going after the younger people. There are people that are ready to use that currency. And a lot of people raise their hand up in here that I think are probably on different sectors of the learning curve. But can you explain kind of the basics of Bitcoin or the blockchain, just to quickly get people up to speed, and then talk about the mom comment?
Wow, I feel like I got to take that in reverse. Like I can't just leave that out there. No, I think some moms are really great with technology. We have some moms on our team who have Bitcoin wallets. Now that I'm done that politically correct sentence, I think it's really about what you prioritize. And we were talking about this in reference to Snapchat right beforehand. You can't serve every demographic. And serving like a 47-year-old, who works at, let's pick on someone, KPMG, in their suburban Chicago office, they probably, first of all, don't need it, and therefore you would be trying to sell them a product they don't need. And secondly, you'd be facing a huge, huge uphill curve in terms of explaining it. Now, let's explain it. There's a couple key terms. The first is Bitcoin. So when people use Bitcoin, they use a capital B, and that refers to the digital currency, it refers to the Bitcoin blockchain, it refers to the whole ecosystem end to end. When people use the little b, what they're referring to is Bitcoins, or these digital tokens, the actual units of the digital currency. Bitcoin as a whole is a globally decentralized peer-to-peer settlement network. And so what Bitcoin does fundamentally is allows me to transact with you without any sort of intermediaries in the middle. So it's basically a peer-to-peer value exchange protocol. And at the end of the day, that's really all it is. It gets a lot more complicated to figure out how it works, but that's pretty much what it is at the end of the day. The next thing that people are talking about right now is this idea of blockchains or distributed ledgers. So a blockchain is a technical concept. We took the name after the Bitcoin blockchain. And what it is it's a type of replicated database. So it's usually a perfectly in sync replicated database that has some feature of immutability. And the space, particularly in London, is really hot with people talking about how to adapt that underlying technology to all kinds of different use cases. We think that stuff's really interesting. We've kept a close eye on it. We're part of the Hyperledger Consortium. We do work on Ethereum. We have our own protocol called Thunder Network. At the same time, I think it's important to remember that about 90% of all the production applications in the world today that use a blockchain, in fact, use the Bitcoin blockchain. Hopefully that helps. Raise your hand if you're confused.
It's not bad.
That's a good ratio. I like it.
So this, and when you're looking at other blockchain technology, these are for settling like asset tracking, art trading, loan trading, but that's still a couple of years away. So you're not really focused on the blockchain for those purposes.
Yeah, I think I'll start taking it more seriously when people pay to use it.
Okay.
Right, and so what you see today is a lot of very small startups who have some gifted people, and what they want to do is they want to get a big project with a bank because that'll help justify fundraising, or they want to get a proof of concept with an insurance company. Maybe they're in an accelerator that a bank owns, and so they'll build some proof of concept, right? But what you're essentially doing is providing free research hours to a bank. And that is fundamentally a terrible business model. And so when we start to see people, pay to use these products, is when I'll start to take them much more seriously.
Okay. So it's kind of trendy to be a Bitcoin startup to a certain extent, and sometimes it's attached to bank accelerators, and like you said, sell some product first, because that shows that there's a business there.
Yeah, I think if you have, a major customer who has a lot of money, and they're unwilling to pay you to do something, your product's pretty rubbish.
Okay. Again, I hate to keep quoting you, but I'm going to do it anyways. You once said that we're not at Bitcoin 1.0 even yet, and that 2.0 is not going to happen for 7 or 8 years. What did you mean by that?
I'm probably a pessimist, which makes me sort of an aberration as a tech founder. I think that it'll take a lot longer than most of my colleagues. So a lot of folks are saying, okay, this is going to happen in the next 2 years, 3 years, 4 years, 5 years. When people join the company, I usually say it'll be somewhere between 10 and 15. And so very long-term focus. I think that, we had a lot of people start talking about Bitcoin 2.0, and they would use that term to refer to anything from alternative blockchains like Ethereum to private ledgers like Hyper, and they're like, it's ready, it's time. And I was sitting there going, hey guys, we just finished building the Model T. We haven't done seat belts, airbags, hydraulics. We finished the Model T. It goes 20 miles an hour. And y'all are proposing to build a rocket to go to the moon. And I firmly believe that we needed to build the next Model T. We need to extend that. We need to figure out how airbags work. We need to figure out how to drive the thing at 50 miles an hour. And then we can build a rocket. And so that's what I meant with that comment.
Okay. You talked about a company being viable if it sells products. Tell me about blockchain and its products and its customers. I think you might be around 7 million wallets right now. What is the wallet? If I was one of your customers, how would my experience be with you? What value would you give me? And then what would I pay you?
Yeah, so fundamentally, we're a infrastructure company. We provide enterprises and individual consumers with infrastructure. And that manifests itself in 3 core products. The first is our first product is Explorer, our search engine. It's sort of Google meets Bloomberg for the Bitcoin ecosystem. And that product generates a tremendous amount of web traffic and generates revenue via advertising. So we sell advertising on that product similarly to how Google makes money or Facebook or whoever else.
Okay.
It's a very simple business.
Advertising to like exchanges or?
Exchanges, what's my favorite? My favorite is OkCupid.
Really?
Yeah, OkCupid is a big ad
Do
buyer.
they accept Bitcoin?
They do.
Oh, okay.
Yeah, good to know.
Good to know.
The next product is an API, so it's a development platform. We have thousands of active users on that, and people use that to do everything from build a notary service to a peer-to-peer loan service, build a specialized wallet, so maybe a wallet for children, merchant processing, all that kind of stuff. The product that we're most famous for, and the one that you want to talk about, is the consumer wallet. That product started with a simple insight, which was that people wanted a real Bitcoin wallet. They wanted their own private key. They wanted to manage their own money, but they didn't want to manage all the infrastructure around that. And so what we do is provide a software package that allows you to create and secure your own private key or your own identity for the blockchain. And then we provide you the infrastructure that makes that work. And that product now is the most popular one in the ecosystem by far. I think if you add up all the other competing products together, they still don't have quite as many as we do. It does about 80,000 transactions a day. To give you a sort of scale comparison, I think TransferWise does about 15 to 20,000 transactions a day. So it's a massively used peer-to-peer financial product. And that product does not make money. That product loses money quarter after quarter. We've primarily been focused around growth on that product. And so it's not unlike the others, it's not a profitable product. What I will say is, earlier I was referring to, we were either going to have to move to the Valley or build an exchange to raise capital. We did neither. So what we did was we figured out how to make money. And people often ask me, what is the secret to bootstrapping? The secret to bootstrapping is to not spend money. It's really not to make money, it's to not spend it. And so there's all kinds of hilarious stories from those early days, which some of our folks who date back to that time are here in the room tonight. And I might just call them out and make them stand up and tell funny stories. Terrified now. Anyway, but you don't spend it, right? And that's what we did. And that helped us, really define who we were. And so we've always operated at a really low cost basis, and that's allowed us to prioritize growth for that core wallet product.
Okay. Just back to the wallet really quickly. It was banned briefly from iOS and the App Store.
That's right.
That's because at the time, as I remember, Apple wasn't sure if they wanted people transacting in Bitcoins, and maybe the Silk Road was kicking off then. And can you just walk me through that period? Was it a tricky period for you? You obviously got back on the store. Any amusing anecdotes from that time, or observations?
Yeah, sure. We did get banned from the iOS store, which I think if you're going to be a successful startup and you don't get banned by either mobile platform, you're kind of odd, or Google Ventures invested in you. but it's usually a good sign when you get banned at some point. You've kind of worried somebody. We spent about 4 or 5 months out of the App Store on iOS. In that time, we started working with them, trying to reach basically they just didn't know. They were like, we don't understand it, so we're going to ban it. And when they understood it and understood the value it could bring, iOS users, they allowed it back in the App Store. And actually, we were the first Bitcoin wallet that they allowed back in the App Store. For a while, we were the only Bitcoin wallet in the App Store.
Okay.
Now, in terms of them using antidotes, some of our customers were really upset when they banned us. And there's an amazing genre of YouTube videos where people are destroying iPhones in protest. And so you can see all these funny videos where people talk about our wallet and then smash them with machetes or blow them up with firecrackers or shoot them with a machine gun.
That's nice. That's good press.
We had some American users. It's a weird country, so I don't live there.
You mentioned funding. You got $30 million a couple years ago. You haven't had to raise since. You've been bootstrapping. Is that something that's coming up? Is the exchange the idea, or is it none of my damn business?
I think it's everyone's business. That's what I've learned. So yeah, we bootstrapped for a long time. We came out and raised our first round of outside capital. It was and still is the largest ever first outside round. That was about actually not years, but 15 months ago. This is fairly recent. We have done transactions since, but none of those are public. Similarly to how I said the secret to bootstrapping is to not spend money. The secret to not running out of money is also, ironically, to not spend money. And so we have a very large balance sheet. And my view on raising capital is that you do it not when you need it, but when you can add capital to the balance sheet at a price that you're really a fan of. And so as long as we're in certain areas where we can do that, we'll continue to pursue that strategy. And when the market doesn't allow for that, we will use our very large balance sheet to maneuver through the market.
Good answer. You mentioned banks earlier, and maybe some startups that are associated with banks. What do you think banks fundamentally get wrong about the Bitcoin space? When I think of the JP Morgans and the Deutsches and the Barclays that all think, okay, we need to be over here or not be, do they conceptually not kind of really understand what's going on over a 15-year horizon?
I think it depends which bank. So the banks vary tremendously. They vary within themselves tremendously. I think to answer that question, you have to zoom out from, do banks get Bitcoin? Do they get distributed ledgers? You have to zoom out from there and say, do banks understand technology? And I think for most banks and most teams, the answer is no. And I think that's what's really interesting to talk about in context of the banking industry today, is not, is distributed ledger going to replace X, or is Bitcoin going to replace Y or Ethereum or whatever else? The really interesting question is, what banks are going to make the transition from being banks to being tech companies? Which ones are going to make it really well, and which ones are going to go entirely out of business?
Okay. You mentioned TransferWise earlier. When you see a company like that versus the banks, is that a similar misunderstanding of technology?
So you're asking me if TransferWise misunderstands technology?
No, or if TransferWise is kind of an example of a company that gets technology, in a much clearer way than, say, a bank would. Or is it this innovator's dilemma? The bank has all these legacy profit bases around this foreign exchange mechanism.
Well, they have a lot of limitations. So, number one, they've lost a lot of their best people over the last 4 or 5 years. Bank is no longer sort of where you aspire to work. If you're a really talented younger person. So they have a talent problem, they have a brand problem, and TransferWise fundamentally has really taken advantage of the bank's brand problem, right? So TransferWise, hasn't really found a tech arbitrage so much, and I'm sure their tech's great, but the key insight to their product and their business is taking advantage of this brand arbitrage, in which people don't trust the banks, they don't want to use the banks. They can avoid them, they want to. And so TransferWise has brilliantly saw that weakness and then seized on it to do really well.
Just want to ask you about Bitcoin in general. I spoke with people in the e-commerce space, in the last year, and asked if it's going to be a factor in, say, e-commerce in the next 5 years? And most of them say no. I'm curious if you agree or disagree with that. And do you need it to be a token of mainstream commerce in order for your business model to work out? Or is this just something that's going to become a distributed bank of peoples all around the world that aren't necessarily in this tiny sliver of the Western world that I'm looking at?
Yeah, I don't think it's ever going to be, well, maybe not for the foreseeable future, a fundamental driver of e-commerce in the Western Hemisphere. I think Bitcoin does really well in certain use cases. I think online shopping in the United States is not one of them. I mean, the ultimate reality there is,
Why is that?
Well, the reality is we're pretty well served. So I run the largest Bitcoin company in the world, arguably. I have some Bitcoins. I do not regularly buy things with Bitcoin online. I use Bitcoin for all sorts of things, but I don't buy a new sofa with Bitcoin. The reason is I have pretty good access to financial services today, and that is really a minority experience when you look at a global context. So if you look at the global context, Americans, and to a little bit of a lesser degree, British people, are incredibly privileged in terms of access to digital financial services. We all have cards, we have mobile banking apps, we have access to the pound and to the dollar, which are the world's two best currencies, arguably. But that only applies to maybe 400 million people, 500 million people, out of a much, much larger global population. And so I think that for Bitcoin, the segments that make a lot of sense are people who are underserved by their current systems. So these are people like in Indonesia, where you have 280 million people and you have 8 million credit cards. And that sounds bad until you find out that only 4 million people have those 8 million credit cards. So 4 million people out of a total of 280 have a way to pay for things online, right? So that context, Bitcoin and digital wallets and digital finance and leapfrogging, the payment networks and banks makes a lot more sense than it does for me to try to convert you to buying your sofa with Bitcoin if you lived in Idaho or something. Now, the other thing that Bitcoin excels at is providing a hedge for people when they live in a country with unstable macro outlook. And so this is places like currently the big ones are Brazil, Venezuela, Argentina, and with our data, hilariously, Italy.
Really?
Yeah.
Greece? No, because there's
Greece is a small country, so Greece, half the Greek nation maybe would have to get a Bitcoin. No, I'm just kidding. But yeah, Southern Europe generally right now, people are quite concerned. I think they're worried that you guys are going to exit the European Union or something.
To be continued.
To be continued.
We had Andreas Antonopoulos on London Real, and he's a very outspoken, very knowledgeable about Bitcoin. Mm-hmm. And I just want to hit you with some of the expressions that he says. He says, Bitcoin isn't slow jazz, it's punk rock, deal with it. That's the way him talking about it being a disruptive technology. And he also says, it's not money for the internet, it's the internet of money, and it's a fundamental transformation of every aspect of money. Do you agree with any of those statements? And if not, can you put some of those in perspective? He's very passionate.
Sure, I was never the best giver of pep talks. And so I'm glad that there are people like Andreas out there in the world to do it. He's a super eloquent advocate on the behalf of the ecosystem. I would point out, though, that at some point, slow jazz was thought of as really radical music, right? So everything becomes less radical with time, right? It's like if you ask me if I thought the music that that people thought was radical 20 years ago was radical, I'd be like, no, that's the oldies station, right? The music that I listen to, our younger developers literally think is the classics. Like, oh, you're listening to the classic Spotify station. It's like, no, I'm not. No, I'm just lame. So, that's what happens, right? And so he's right in a sense, right? That right now and maybe even 2 or 3 years ago is very radical, but things wear in. Society adjusts. And I think that's happening with our ecosystem now. I used to be a radical tech pioneer, doing a company that was so weird, even venture capitalists wouldn't get involved. And now, you know, my typical day, you know, week is like at least one bank C-suite, you know, executive, a World Economic Forum thing, you know, and a call with a reporter or a regulator or something. And so it's shifted from, you know, crazy hacker stuff to a very mainstream, very accepted thing to work on.
Did Bitcoin suffer a PR problem when the Silk Road came out, and then the arrest, and then the Bitcoins paid for the assassination and all that stuff that seemed very far-fetched to me, but did it hurt Bitcoin or not?
Yeah, interesting to see the way markets react. One of the fascinating things about Bitcoin is that unlike most big startups or most big like new categories, it's priced every minute, right? So, you know, if you think about building, if you were going to build Snapchat and get priced every minute, very different from building Snapchat and getting priced every couple quarters. But that's one of the fascinating things about our space. And it was really interesting to watch market response to Silk Road being seized. The price shot up because people viewed it as a risk, right? And so getting shut down was not a negative thing for the market, it was a positive thing for the market. And I think that's very instructive. You know, I think any new technology is going to have a lot of uses. Some of them are going to be illicit, some of them are going to be legitimate. And what you want to see is that over time, those illicit use cases are reduced. And we've definitively seen that in Bitcoin. The kind of tools that are possible with a global transparent ledger are very, very impressive. Law enforcement's got very adept at dealing with investigations that relate to Bitcoin. And you don't see any more wide-scale dark markets in existence today.
Talk to me about the price of Bitcoin. Is it always correlated with how bullish we are on the space, or is it not correlated? I remember 3 years ago, I had Max Kaiser from the Kaiser Report, who lives next door to me, by the way, at my house for Thanksgiving, and he sold someone a Bitcoin for $1,000. It was right when it was right at the peak. And since then, we've seen it go up, we've seen it go down. I think 2 days ago, it was at a 28-month high, $780. I think it's down another 10%. I'm sure the last thing you want to talk about is the price of Bitcoin. But tell us about what the price of Bitcoin tells you. Like you said, when the Silk Road PR was happening, it was going up. What does the price of Bitcoin mean?
You know, it means I could sell more advertising.
Is it that is that simple?
Yeah.
Is it correlated that much?
When there's a lot of market volatility, people go look at the market, and they use our site to do that. And you know, we're selling every single one of those impressions. So I'm a fan of volatility.
Vol, not price, but
correct.
Vol. Okay.
Preferably if it's going up, because that's the best for impressions. You know, I think the Bitcoin price is a fascinating thing, and you really have to look at it in like quarterly basis. It used to move, you know, basically just according to who was manipulating it at the time. And then regulators came in and kind of got that under control. Most exchange, you know, volumes on regulated exchange now for the US dollar. Then it was correlated to sort of, you know, sentiment on the space. Now it's increasingly correlated to wider macro. So, you know, when fears of the Brexit went up, the price of Bitcoin went up. When, you know, negative numbers are, you know, out, Bitcoin goes up. So it very much, you know, trades almost like a gold or something like that. But, you know, it's a very small market. You know, it's 10 billion cap, a couple hundred mil a day traded. You know, I think it's important to not read too much into it.
Is there a stock that mirrors Bitcoin kind of in market cap size? Or is there something you compare it to? Is it like the size of like Cow futures or something?
It's actually right now exactly the size of Western Union.
Of Western Union?
Mm-hmm.
Oh, okay. It's a nice dig.
Yeah.
So for you though, if Bitcoin went to $10,000, you're probably going to have a great year in business. And if it goes to $100, you probably won't.
You know, not like you'd think. So for us, what's the best scenario for us is stability. So the Bitcoin price going up is good. The Bitcoin price going down is okay for us. But really the best thing we can hope for is stability.
Just calms everyone down.
Well,
because
no,
real users of it, they just want to pass it through.
Correct. It's because we are that infrastructure middleware layer that enables you to transact in Bitcoin, right? And so for us, stability is great. You know, for Coinbase, volatility and the price going up is probably great, but for us, stability is really what we'd prefer to see.
Okay. Oh, and Max Kaiser wanted me to ask you a question. Is Bitcoin a commodity or a currency?
Bitcoin is a digital asset.
What does that mean?
Great question.
Okay. I can't even define necessarily currency or commodities. That's cool. Tell me about you and what your view is on London right now as a fintech capital. You're not based in the Valley, which is interesting. You're in New York City, in Soho, and you're here. You spend a lot of time here. What's London like when it comes to fintech?
Oh boy. I think the London tech scene has basically rapidly expanded. And anytime you have a rapid expansion, there's some house cleaning to do. I think you've seen a huge expansion in the number of early stage VC firms. If you look at the number of early stage investors from when we started our firm to today, it's like 4x, which is great for the ecosystem. It also means that weaker companies are getting funded. Good for the ecosystem in the terms of more and more people are working in the community, getting experience in startups. Bad because we'll see a lot of investments going to zero. And given that context, my hope is that we don't see so many go to zero that it sours people on the general ecosystem and idea. And we need some of those, at least half those early stage funds to raise a second fund. And so I think, as entrepreneurs, as people that care about tech, it's time to dig deep and turn a lot of those into real success stories. London doesn't have a seminal success story yet. London has a lot of small hits. So DeepMind, 400 million, SwiftKey, 150, and you can kind of go on and on and on with these sort of like couple hundred mil successes. London tries to claim Spotify, but Spotify is not really London. Small success after small success, small success. For this ecosystem to really work, we've got to see some big companies, some category-defining companies built in London.
And what about New York? What's the fintech scene like there? How does it feel? How does it fundamentally differ from London?
I don't get out much in London, and I get out even less in New York. I really like quality time with my laptop.
He's being honest.
So, I would say from the one or two times that I've been to events in New York in the last year, New York went through that rapid expansion a while ago and is now in a consolidation phase. There's a lot of very real companies being built in New York right now. The talent pool is very deep. And I think New York also benefits from its proximity to Boston and its proximity to Silicon Valley. London, New York is like a city that's following the Valley and becoming a tech, but there's already the Valley. London has not just London to lead the way for, but essentially all of Europe. Like if London doesn't work for tech startups, Berlin's not going to either. Neither is, Lisbon, neither is Paris, neither is whatever other city we want to put on that list. London has to lead the way. And New York doesn't have that pressure. New York doesn't really have that issue. It can focus on the things that really differentiates New York, which is fintech to an extent, but also e-commerce and media.
I mean, is New York going to create a great fintech company, do you think, in the next 3 or 4 years before we do here?
Well, if you ask city government in New York, we are a New York fintech company, and so yes.
And besides you, is it going to happen there, or is it going to be
absolute shit? No, I'm kidding. I think New York will create great fintech companies. There's a couple there that are earlier that have great promise, but the real strong companies in New York right now are in the e-commerce space.
Why aren't you in the Valley? Pros and cons for being there.
Yeah. There's one big pro to not being in the Valley. When you're in the Valley, you're in an echo chamber. It's where the best are, it's where the brightest are, they say. I don't know if I believe it. But you're also fundamentally in an echo chamber. And it's easy to lose sight of your customers, because your customers aren't your other friends in Silicon Valley. And it's easy to lose sight of what you really need to do. And you see that happen to companies constantly. The best example of this is maybe the entire on-demand space, which, for the most part has focused on serving their customers in SF, which is a very strange community that differs from the rest of the world, and most of those businesses fail when they extend out of that.
On demand, like consumer services on demand.
Like delivery.
Okay,
yeah.
right. So they cater to their own audience, which has nothing to do with the rest
Correct.
of the world.
And so that echo chamber is huge, and we've seen that in Bitcoin. The echo chamber, the Bitcoin echo chamber in the Bay is maybe the most intense echo chamber of them all. And so it's kind of interesting and insightful that the company that acquired the most users, serves the most customers, was built very, very far outside the Valley. And actually, I have a general rule. I like to spend no more than 48 hours in the Valley, because I feel like anything more, and I'll make our engineering team build a weird feature, get distracted, or I might become a thought leader. Lord knows, no one wants that.
And on that same note, why be in London? Is it necessary to be here?
It's a good question. Sometimes I miss York. Not often. Do we have anybody from Northern England here? Nice. Do we have anyone that loves Northern England here? All right. York was even less distracting than London. If London's, a lot better place to focus than the Valley, York, you just focus. There's nothing else going on. I've been to almost every restaurant in New York. I've been to all the tourist attractions. And at some point, I basically couldn't convince any more young people to move to York.
So you were based there a few years ago?
Yeah, the company was, yeah.
Okay.
Out of a 2-bedroom apartment. And, at some point you have to hire a bunch of folks and just, so you need to move down to London. And so I felt like, at the time we looked at London, we looked at Berlin, we looked at Dublin, we looked at Amsterdam. And in the end, I feel like you can attract more top 1% engineering talent to London than you can any other city in Europe. And I think that's the real reason to be here in London.
Talk to me about talent. We had some hands go up earlier, and there were some experts in the room in Bitcoin. How can you determine who is really qualified in this space? Because it's very niche. There's a lot of talking going on. There's a lot of buzzwords. How can you tell, and can you tell in 20 minutes whether someone should work for you?
20 minutes would be a push. I think on the engineering front, most of our hiring process is centered around code review. And so we have this fundamental belief that, the best engineers often don't interview very well. They actually often interview horribly. But you can read their code, and great engineers write great code, and that's fundamentally what we're hiring them to do. And so we usually find our folks that way. Actually, I'd say at least half of our engineering team is people that I was surfing the internet late at night, GitHub accounts, projects, reading, and then randomly emailing them. And then stalking them, just creeping on them.
That's how you find them?
Yeah.
Okay.
For sure. And there's people in here that I've done that to. And they still work here, even though they know it. So it must be all right. But
could be a startup there.
Yeah, there could be a startup there. But past that, if you want a trick question to ask people to see if they really understand, you just ask them, what are the advantages of the UTXO approach as compared to an accounts-based approach?
Who knows the answer to that? Is that a trick question?
There are at least 2 people in this room that know the answer to that question. Nope.
Wait for it. Can I ask you about leading? I'm guessing that you probably never had any formal training as a leader or as a manager. And I find this whole concept pretty interesting. I actually had a guest recently. His name is Jocko Willink, and he's a U.S. Navy SEAL, and he talks about leading a team of SEALs, and he said it's not as easy as you think, Brian. You think these are robots, but these people have their own egos, and they do what you want to do. And I was just curious how you found your own leadership style, and has it changed, over the last couple of years?
Well, man, that'd be a better question for the people that have had to tolerate my leadership styles over the last couple of years. Let's take a stab at it. I actually have had formal training. So it's something that tech CEOs don't like to talk about, but most of us don't really fundamentally know what we're doing, which is entertaining. because historically we're the sort of people that are used to being good at our jobs. And when you become the CEO of a 30-person, and really 30 is the cutoff point company, you don't do anything enough to be good at anything. So basically all I do now is do a little bit of everything, and I do a little bit of everything poorly, right? And so there's two implications there. One is that you have to like reconcile your type A obsessive personality with a lot of failing, and that's hard. A lot of people respond to that by sort of lashing out, and that's not good for anyone. The second thing that you have to learn how to do is you have to figure out how to focus on stuff that's truly, truly important. And that's really probably the most difficult thing to do. And so what I did was I found someone who's really good at coaching execs. He's a guy that works with the CEO of Bloomberg, CEO of Amex, also CEO of Snapchat, Bonobos, so a really qualified exec coach. And I've worked with him for quite a while now, and it's really, really improved, I feel like, really improved my leadership abilities and my management skills.
So he coached you or your team as well?
Both, yeah,
Really?
both.
Can you give me a couple of nuggets? I mean, of things that you learned?
Oh, yeah. I think the biggest thing you learn is that you have to be quite vulnerable with the people that you work with. You know, if you want, everybody likes to talk about this thing where they're like, oh, we want bad news fast. You know, bad news fast, good news slow. You know, tell us when you're messing something up. If you never talk about fucking things up yourself, that's never going to happen. And so I think, you know, the sort of simple truth to the whole situation is that if you want people to behave in a certain way, you also have to behave in that way. And that's like very, very, you know, common sense. But ultimately, that's what a lot of this stuff boils down to.
So you come into the staff and say, I was wrong about this, I screwed up, you know, I'm sorry for leading you on this thing, but now we're going to try to find a new solution.
Yeah, that's about all there is to it.
Okay. And you as a CEO now, is the majority of your time spent like on stage here, you know, going to Beijing tomorrow? Is it really a lot of public-facing stuff, vision stuff, press stuff? Do you find that you have to constantly repeat your message just for your employees, investors, everyone?
That's a good summary. No, I still spend most of my time with our product and engineering team. And that's only because we have a great team that looks after operations and finance and legal and marketing and all that stuff. I do a lot of externally facing work now. We hired a great person to lead that function at our company, and she and I have a very carefully negotiated agreement about how often I'll come out in public. And that's been good, and I've enjoyed that. I think one of the things that I really enjoy about getting out is finding our users in weird places and talking to them. So when I'm traveling, I always try to go to a meetup. Usually, you know, I just show up and I'm like, hey, I'm Peter, I'm from Blockchain. I'd love to talk to people that use our product. You know, I think as a tech CEO, it's easy to get away from the product, easy to go away from the customer. And the more you talk to people that use your product, the better. I also think the thing that is really important is you have to find people that sort of share your passion for whatever you're working on. I think I was talking about this in a staff meeting the other day. I'm like personally embarrassed about the product that we ship. I can find problems on every single screen. But we ship it because people want to use it, and we have to keep getting better and better and better. And so the key for me is to find people that are as aggressive about quality, that are as passionate about not letting a bad feature in, about not letting bad code in. And I've been very fortunate to find a lot of those people, particularly on our engineering team.
I think someone once said that if you're not embarrassed with your product, then you should ship it. I mean, like, you have to be embarrassed in order to get it out.
Yeah, there's some truth to that. It's a hard maxim in our space because if you ship something bad, you can lose quite a lot of money very quickly. So you need quite strict quality assurance controls. But that is true to an extent. You know, people often, biggest mistakes you'll see young startups make is they don't ship stuff. And they invest a ton of time into getting something perfect, and they think it's perfect, but users disagree with them. And so I think the sooner you can get something out and you can get people using it, the better position you're going to be in.
But you're obsessed with product, and that's probably the way it should be.
I don't know if I'm obsessed. I certainly get very riled up about it. It's probably the only thing people see me get riled up about at the company.
Your biggest challenge in the next 12 months?
Staying awake. I think I'm getting older. I'm starting to have to sleep more. I'm still really young, but I'm just running out of tolerance to caffeine. You know, it just doesn't work like it used to. But no, I think, and this is a cliche, but the number one problem that anybody that's at our scale has is probably hiring. You know, we have a really high bar. We interview hundreds of candidates to find one hire, and then we drop about 20-30% of those hires.
Within the first few months?
Mm-hmm.
Okay.
And so when you're looking at doubling every 12 months, that means like if we're going to hire 12 people in the next quarter, we need to look at, you know, thousands of candidates. Talk about a overwhelming mission. You're talking about thousands of candidates, hundreds of interviews, hundreds of reference calls to hire those people that are going to make your team and make your business great.
Do you outsource that?
Absolutely not.
Okay. How old are you? 32?
I never talk about it, mostly for the reason that people are constantly trying to hack me and steal my personal information. It turns out there's...
Is that true?
Yeah, there's...
Andreas is the same way. He won't give his address out or anything.
Yeah, there's several downsides to running a large Bitcoin company. One of the biggest being that your phone is never safe. So, you know, enjoy all of my photos when they're leaked on the internet next week.
Awesome. Peter, thanks so much. I
Yeah.
appreciate you getting personal. I think we got a few questions from the above. These ones for the audience, yeah? Ooh, these look good. Okay. And if anyone can tell me Peter's age by the end of the session, then you can come on my show. So just get busy on this. Peter, someone wanted to know, this is Hagai, who's out there. Who's Hagai? There he is, cool. He said, where did you live in East Africa? What did you think of the tech scene in Nairobi with all the technology giants setting up there? Good question.
Yeah, it's a great question. I lived actually in Nairobi. I also lived in Uganda, but I traveled pretty broadly throughout East Africa to Congo, Sudan, Ethiopia, Eritrea, which was interesting. But I wasn't all that involved in the tech scene in East Africa, so I don't really have a satisfying answer for you. Since leaving East Africa, ironically, have been exposed to more East African entrepreneurs because when they come to London or come to New York, the East African business community is small enough that people will introduce me, and then I'll often make introductions for them, and I'll meet them, and I'll hear about what they're working on. I think over the last 5 years, there's been incredible growth in the tech ecosystem in East Africa. And what's really exciting about East Africa tech is that you don't have any of the limitations that you have around legacy lock-in in Western markets. And so in a lot of cases in East Africa, you are offering a product for the very first time. This is the very first time anybody's had access to it. And I think that's a really special opportunity.
They don't compare it to a bank or any other thing?
Mm-mm.
Okay, maybe a local lender is probably the closest thing.
Yeah, and there's actually one East African startup that I use very frequently. It's a company, ironically, Bitcoin company called BitPesa. Have you heard of that one? Yeah. Yeah, and so I use BitPesa to send people money in East Africa. So very useful service for me. It used to be a big pain.
Cool. We got a product question from Ryan Radloff. Where's Ryan? Okay. It says, Peter, can you briefly talk about the future of the Thunder Network and what that could mean for machine-to-machine HTTP payment layer?
HTTPS payment layer.
Left
So Thunder Network, for people that want the backstory, is a protocol. And the protocol is built with payment channels and smart contracts. And what this does is enable you to build almost a mesh network or hub and spoke network on top of the Bitcoin protocol. Or you could use the same sort of general technology on top of the Ethereum protocol or on top of any sort of blockchain-based protocol. What it allows you to do is increase scale and velocity. So it allows for instant payments in really high volume in tiny amounts because it's incredibly efficient. And what this does is it opens up all kinds of new payment use cases. And so I honestly don't think it's a great replacement for a lot of the Bitcoin transactions that happen today. That's a very specific transaction type. But as you're talking about, what it opens up is a possibility of a web of connected machines that are paying each other. It's really interesting if you're a developer because when you're putting together a new service, one of your biggest problems is signing up and provisioning. Because you need to put in your credit card for this API and that API, and then you need to spin up these machines and handle the authentication. And the idea behind these networks of sort of machines paying each other is that you can automate all of this, and you can do it in a really high speed, really low cost way. And I think that's a really powerful vision.
Nice. Rob Crow wants to know, what are your thoughts on smart contracts? We talked about them briefly, but anything more to add?
I think they're exciting. That's an open one. I think that they represent sort of a huge opportunity, but also, as we're seeing real time in the last 10 days with the DAO incident, a huge challenge. This engineering is incredibly difficult, and it's like fly-by-wire level of control and precision you need. Smart contracts is even a step further. I mean, the amount of things that can go wrong is huge, and the amount of sort of sector knowledge and diversity of skills and real-world experience running them that people are going to need to develop before they're in widespread use is truly huge.
Can you briefly talk about what happened with the DAO? Just explain it. I mean, I read a little bit about it, but
yeah, people make the DAO very complicated, but it's a very simple thing. Some developers put out some code. People used that code, and unfortunately, their code's buggy, and got hacked, and probably at least half the funds will never be recovered.
And this was code used to transact in Bitcoin?
No, in Ethereum.
In Ethereum, which is an alternative.
An alternative to Bitcoin, correct.
Okay. So this is kind of a big deal that happened a couple weeks ago.
Yeah, it's a big deal, but
okay.
These are things that happen in these sort of radical experiments.
Is this comparable to what happened in Japan with the failure of that exchange? What was it called?
Mt. Gox.
Mt. Gox.
In a way, yes. In a way, yes, because there's also a developer that shipped faulty code and things went sideways. The DAO is a lot sexier because it's the first distributed autonomous organization. So the idea was that what was the really good marketing slogan? The DAO is code, right? And so it's this idea that it wasn't a company, it wasn't a team, it was just code, and people were going to participate in it, voluntarily. But it was its own organization, and it was going to self-run. And that's a really powerful idea. And I think those kind of oracles, I kind of prefer to call them oracles. I think those oracles are absolutely going to exist. And they're going to be powerful, and they're going to generate real value. It's also going to be a really hard task to get them right. And I think we're seeing that play out in front of our computer screens the last couple of weeks.
Did they get funding as well? I mean, was it?
No, it was a crowdsource.
Just crowdsource.
Yeah,
okay.
I think it was the largest crowdsource in history.
I remember I interviewed somebody about Bitcoin a couple of years ago on our Silicon Reel show, and they said if you think about this concept where a computer could generate a company and then raise its own money with Bitcoin and put in these algorithms and take advantages of these, of these market inefficiencies and like create the next Deliveroo without having a team and a person behind it. Is that kind of this Oracle idea?
Yeah, but that's this Oracle is like the equivalent of the wheelbarrow. If those guys are talking about a car, the guys that were talking to you, that's definitely possible in the very distant future. But by that point, there'll probably be no need for biological humans.
Okay. Hope we have a few more years. So with DAO, is that pretty much going to be the end of something like that? When something major crashes, is that going to really hurt?
No way.
Okay.
It'll hurt, but they'll come back stronger as an ecosystem.
Okay. The Bitcoin ecosystem it's very robust. It knows how to take these hits, right?
Yeah, we have a lot of practice surviving our own stupidity.
Okay, a couple more questions. Pelinko says, what's the best use of blockchain that you have seen so far?
Oh, that's a tough question. Probably my favorite was for some folks that built a rather hilarious sort of game on your phone that I really enjoyed. It was kind of like a Flappy Birds, but you played for money. And that's probably the single most entertaining thing that I've seen done with a blockchain. That's probably not what that question is about.
Probably not, but I never thought about that. Another question, you might have just answered it, but there might be a nuance here. Opinion on smart contracts on the Bitcoin blockchain, and then are you guys building tools for the Ethereum blockchain?
It's a good question. Two questions, in fact. Smart contracts don't exist in Bitcoin. There is some folks that are working on that extensibility, but they don't exist today. I think they will at some point in the future. Are we developing tools for Ethereum smart contracts? I don't think Ethereum smart contracts are mature yet. We have a tendency to take really complicated technology that's ready for production. We take that and we make it into a product. When we make it into a product, it's our expectation that it's ready to be used by real people. I don't think Ethereum smart contracts are there yet, but they're close. So I'd imagine that we'd start working on it as they get a little closer, but they're not there yet.
Okay, a DAO question I didn't see before, but it's kind of nuanced again. Does the recent hack on the DAO represent arbitrage by a talented participant or just disruptive greed? How can Ethereum proceed?
Oh, this is actually a fascinating question. Who asked this question?
Gids.
Nice.
There he is.
So, if the DAO is code, and the code allows for this behavior, then it's not really hacking, right? It's just a use that most people didn't expect, right? And so, if the DAO is just code, then this is an acceptable use, and the community should do absolutely nothing about it. That's my view. I'm also the kind of person that rips tape off, in one go rather than getting it wet and taking it off slowly. But I think if they're serious about the underlying idea of the DAO and the DAO just being, neutral code, the code allowed for this, and that's that. Now, there's two nuances to that. One is that yesterday and today, some white hats, so people with the best interests of Ethereum at heart, have launched a counterattack. And that counterattack has now basically wiped out the original attack. And so quite interesting to think about a world in which you're adjudicating disputes via essentially security vulnerabilities, which is a terrifying new world we're headed for. Past that though, and this is a sort of really interesting nuance, the attacker isn't planning to make money by siphoning out the Ethereum, the Ether, and selling it. His strategy for making money was to go short on markets. Caused a panic, caused the market to crash, made money on the short. Okay. So it's a really interesting, complex situation.
Did people on the inside know who did that? Does it have the style of certain people?
I don't think anybody knows.
Somebody knows.
Somebody knows, whoever did it. But I certainly don't know.
Okay, two more questions. I think you might have answered this, but what is your hope for Thunder? If maybe you just explain that again.
Well, my hope for Thunder is that we get it from alpha sort of testing status where it is today. So we're the first company in the world to take the hypothesis that you could do this sort of thing and do it in real life. And we did that a few weeks ago. So it was pretty exciting, covered by the press, really kind of an advance in sort of computer science experiments, which for a very technical company of mostly hardcore nerds was a great moment. Slight problem is very unusable. So I was on the other end of the first live Thunder Network transaction, and people asked me, what was it like? How was the experience? And I was like, well, it was Bitcoin in 2011, but worse. Which is not to sort of downplay the amazing work that team and that lead developer is doing, but it is to say that it's got a really long way to go before it's a product. And that's what people, particularly in our space, which is driven by a lot of very technical engineers, forget. There's no point in engineering for the sake of engineering. You have to take that engineering, that highly technical highly technical protocol, and turn it into something useful that delights users. And that's difficult.
It's all about the human experience, ultimately.
Or the machine-to-machine experience. It just depends. If another 4 years, maybe we don't have human customers.
Do you really believe that's going to happen?
No.
Okay. I never know. Last question. Does blockchain support bigger blocks? That question is from CoinVault.
Yeah. I think
What does that mean?
So there's lots of different ways to scale the network. One is to increase the blocks that go around the network. I'm, I think, very publicly on record as being supportive of bigger blocks. I also will preface that by saying I'm very publicly on record about supporting pretty much every type of scaling. So I think when you go to scale a system, you need to scale it from every possible angle. One of those is bigger blocks. There's lots of other angles as well.
Cool, that's it for the questions. Is there anything I missed, like big gaping hole, or just anything you want to leave us with as far as just a thought about the space, or just things that are on your mind lately?
Yeah, so I think the thing that I like to leave off every talk with is, as I was saying before, we're looking for great people. So if you want a job, if you want to work on really hard problems, and you want to work a lot, send me an email. My email is peter@blockchain.com.
What's a lot?
I don't know, somewhere in between how much I work and how much you work.
I don't even know what that means.
Yeah, but it sounded good, so
Yeah,
it's
it
in
did.
there.
But like, just so I just won't leave that alone. But like, I'm curious, what is the work-life balance on a startup? Is there any, or does it have to be we live, breathe, and eat this, up until we have a child? Or I'm kind of curious because, and also, is that balance slightly different in London than you find in New York versus Valley?
Ultimately, it's who you hire, whether they're in London, New York, or the Valley. I think though that there's a lot of people that have kids that are incredibly hardworking, passionate, live and breathe it. I think it also changes as you get older as a startup. So when you're 12 people, when you're 50 people, it's very different. But I think one of the things that my co-founder said once to a candidate that was interviewing is very true. Is she's like, "What's it like to work here?" And he goes, "The struggle is real." And I've adopted that. People are like, "What is it like to work?" It's like, well, the struggle is real. It's not so much that you have to work 100 hours a week or you have to never go on vacation. I actually encourage people to go on vacation.
You have unlimited vacation.
People need to use it. The challenge is that it is hard. Fundamentally, you're trying to do a really hard thing on a really aggressive timetable. And you have to find people that are excited about that, because if they're not excited about that and sort of aware of that reality, it just isn't going to work.
Love it. Peter, thanks so much for your time and your candor. Really appreciate it.
Awesome.
Okay.
Thank you.